on the fundamental basis, we think the Asian growth in general will be much better than the developed market, for example, in the US or European community. In particular, China has done very well, first in, first out after the pandemic. We are quite constructive in the second half outlook, especially in the Asian growth. So backdrop is quite good. But in terms of the trade tensions or political situation between the US and China, we do not think that they will go away no matter who becomes the next president. So this is a new normal that we have to live with. So some sector, for example, you highlight the IT sector, especially the hardware segment. I think the headlines will continue to be quite volatile. And in terms of managing through these cycles, you really need to understand which company will be affected or which company will be at risk. So I think in terms of the general market, we are constructive, but name-specific, sector-specific, you need to be cautious.
Okay. So then you're looking at it from a specific company-by-company issue, it sounds like. But Arthur, I do wonder if you're talking about this backdrop of improving data. I mean, the industrial profit data out of China was quite encouraging over the weekend as well. Does this mean we're going to get less in the way of stimulus support from authorities? And how does that play out, given the differentials in other parts of the world where we are expecting additional accommodation?
Yeah, you're quite right. Because like as I said, like first in, first out in China, and which actually benefit the Asian economy. So some of the Asian economy actually will register positive growth in the second half. And we currently expect China to register 2 to 2.5% GDP growth this year. So on that, like I don't think that the Asian central banks or the governments will be hurry to do more stimulus. And in fact, we think the central banks are likely on a pause mode in the second half, unlike their developed market peers. But that said, I think if they need it, they can do more stimulus. But we do not think that they will do it more aggressively at this point of time, because the fundamental actually is improving. And you also highlight the point is that like corporate earnings in first half actually are surprised on the upside. So we think that actually will help the credit spreads in the second half, both on the fundamental, on the soft, on the economic level, and as well as on the corporate level.